Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in tonight's free video I wanted to offer some ideas in the indexes that I think are very good to keep in mind as you get into a monthly expiration. So it always seems like they come kind of early whenever the first of the month falls on a Friday, because it's like, wow, is it already expiration? But the 15th will be the February expiration, and when you think about the levels that we're trading at, a lot of times the levels get referenced from the futures as 25,000 and the Dow as being a big round number, and then to a lesser but a similar degree the S&P futures right here at 2,700. So I think if you can take these ideas and agree, or at least think for yourself, that maybe some indecision will come in at these big price points, and just due to the nature of expiration you see some choppy trade, well, then there's a couple of ways to take advantage of this. The ETFs for both of these, the spiders for them in this case, will be very good liquid ETFs and have great options in them. The idea that I'm looking at right here is a slightly bearish tone, but it's thinking that the diamonds could come back to around 250 by this Friday. The most direct way of doing that would be to sell the straddle at these levels, and you've got a pretty decent break even, but that does imply a fair amount of risk. If you would like to do this with less risk, then you just come in and buy protection on it. In this case, I'll do it unbalanced just for the sake of a discussion. You would want them, if you balance it out, it'd be 3 wide on each side. But you can look at this and say, alright, this trade would give me the chance to make $230 while only risking 70. Will benefit from a little bit of a down move. The sideways action is best, and I think that's a very good way of thinking for the next 3 days. So I think you can do that in the diamonds at 250. I think you could do it in the spiders around 270. And if you look at the idea and you like it, but you don't want to have to force it so that it has to be right on this Friday, there is nothing wrong with taking this strategy and moving it out into, let's say, the 22nd of February. So you give yourself another week. Maybe make this $5 wide instead of 3. That is still a great way to play kind of a range-bound, choppy situation around big psychological levels into a monthly expiration, and I think that's a lot better than trying to force a lot of directional trading. So I hope that's helpful, and we'll see you guys at the next free video.